F. Scott Fitzgerald wrote, "Let me tell you about the very rich. They are different from you and me." Well, we were reminded of that this morning when the CEO of American Express, which beat Wall Street on top and bottom lines, really gushing, right? U.S. business, stellar, all over the board. Look at this, folks. Every category up, but look at millennials and Gen Z through the roof. Now, he said that one of their CARB members said that their CARB members don't have any confidence in the market, but they continue to spend because they're not spending on what's in the market. They've already earned this money and they're pretty confident. So I want to go to a guest who knows a thing or two about investing like the wealthy. Walser Wealth Management President Rebecca Walser. And Rebecca, the rich are different when it comes from investing. And, you know, a lot of people, we all want to spend like the rich, but there's a way to get there and it's sustainable. And let's talk about that for a moment.
I mean, obviously, the wealthy are looking at collectibles, fine art, wine, luxury handbags, automobiles. But you're going to buy them, Charles, and you're not going to use them. You're not going to wear the Birkin. You're not going to drive the Phantom. You're going to actually collect them and not use them as an investment.
And it also means patience, though, right? Isn't one of the key things patience?
Yeah.
No, I mean, I'm doing this thing next week, and I'm talking to a younger audience, and that's the primary thing. And one thing I'm going to talk about is they expect to live to be 100,
right?
Like overwhelmingly, and yet they spend their money like they're going to, you know, like next week is not guaranteed.
Yeah.
That's the big divide for Americans, I think.
Yeah, FOMO does not work with long-term investing. That's for sure.
Let's talk about one of the things you've been great on long-term. Ever since I've known you, you've told us to buy gold.
Yes.
It has done extraordinarily well.
Yes.
You are up, your clients are up huge on this.
Yes.
But I feel like you might have a slight short-term conundrum. I'm looking at charts that say these kind of spikes in gold have been like, you know, you see pullbacks, maybe 20, 30%. Are you worried about that? Are you making any adjustments?
Gold always gets volatile when we have liquidity issues. So you will see gold pull back because it's a liquidity source of liquidity. So when you see, you know, the hedge funds and you see the repo market, you see the swaps and all of that going, you will see gold pull back because they will go to it as a source of liquidity. But overall, it will be the harbinger, I believe, of the new asset class for hard assets going into the new fourth industrial revolution that we're headed into right now.
Another reason, though, you used to talk about a lot was this unsustainable debt. The shakiness of governments, the U.S. government, world governments, just a world on edge. It's gotten more on edge. It hasn't gotten better. It's gotten worse. Does that mean, you know, again, a more conservative approach in investing?
I mean, Charles, I don't think that we are hearing it directly enough from the mainstream media. But the truth is we are in a direct trade war between the first and second largest economies in the world. So there is problems afoot. There are more problems coming. And gold is a super hedge, yes.
Just have breaking news, right, during the commercial break that apparently Trump has spoken with Kevin Walsh about potentially firing Powell. And, of course, for a long time, everyone thought Walsh would be as a replacement. This is by the Wall Street Journal. But Walsh is advising Trump against firing Powell, arguing that he should let the chair complete his term without interference. But some are saying maybe if he names Walsh right now as a so-called shadow Fed president, at least it might contain this Fed or put pressure on them. What would you like to see?
I think that there is pressure on the Fed. I obviously believe that Trump is going to the Supreme Court to say, hey, can we actually go ahead and terminate this outside of the named reasons that you can terminate, a head for. So it's a political time. A lot is political right now, and it's really hard to expect that we're going to have it not affect the Fed and the presidency's relationship.
But does it feel personal what Powell did yesterday?
It does feel like we do see one stance before the election and a different stance now with the Trump administration.
Right.
And you have former, like you saw it on Bloomberg, former Fed officials saying we don't need to help Trump.
Right.
So there's that feeling in the air.
You also have some equity investments, right? And they're sort of, I like these ideas. Novo, though, their competitor had good news today.
I know,
and they got it down great.
I know.
But you like this in part because it's come down a lot, a fat dividend, and it's been growing its dividend for a long time.
Yeah,
so you feel pretty good with Novo.
Yeah, it's over 50% off his high. So yeah, I do. I think long term, and we have an executive order. They're going to hold off maybe on the Medicare repricing of the drugs. So we think that it'll maintain its advantage for a couple more years.
Lam Research.
Yep. Also off 46% off of its high. And actually, I'm not a fan of McDonald's. I was a sell on McDonald's, just FYI.
Okay, so you're selling McDonald's.
Sell McDonald's.
I was wondering because you're like, listen, we make them fat and then we help them lose weight.
Right.
Is that the new barbell approach?
Buy all of them together. No.
Okay,
no,
so
McDonald's is a sell. Yeah, because consumer sentiment and people will eat at home, Charles. If they can't afford their Big Mac, they will eat at home.
Although now you got Klarna, so you can actually get Big McDonald's, DoorDash it, and then pay it off in installments.
We can pay off our hamburger 5 years from now.
Yeah,
that'll be
Rebecca.
great.